What's going on, guys? I want to talk to you today about how options should fit into your retirement plan. As always, welcome back to Modern Options. Let's go ahead and get right into the video. If you're still new to investing and you haven't opened up any sort of brokerage account yet, one of the easiest ones to open with that's very user-friendly is going to be Robinhood. And right now they're doing a deal where you can sign up with my link below and you can get 3 free stocks. Let me start by saying that options should not be your main investment towards retirement. It's just way too volatile and anything can happen and you can lose a lot of money. We'll bring back options later in the video on how you can implement it into your retirement plan. So first, if you're dedicating any sort of money into your retirement plan, you definitely want to go with either your employer's match or into an IRA. Starting off with your employer's plan, if they give any sort of match, whether it's 3, 4, 5%, that's an automatic 100% return on investment for every dollar that you put in and every dollar that they give for you. You can't beat doubling your money as soon as you put it in. If your employer doesn't offer a match or you want something that you can have more control or more funds to choose from, then I'd recommend opening up an IRA. And you can open that up with a plethora of brokers, whether it's Vanguard, Fidelity, TD Ameritrade, and start saving for the long term. When you're opening both of these accounts, you should definitely make sure to see if your employer offers a Roth version, because if you do, that's a tax-advantaged account where you put your money in after-tax dollars. Then once you reach the minimum age of 59 and a half, then you'll get to withdraw all of those dollars tax-free. If you decide to go with the IRA option and want more control over the investments that you pick, definitely put them into some high growth ETFs or just long-term index funds. Those are going to be great for you time over time again. Historically, over the long term, you are guaranteed to make profit year over year if you just continue to invest through the all-time highs and the all-time lows without worrying about the day-to-day picture. But one thing, if you're concerned about not being able to touch these dollars until retirement, like say if you're trying to retire early, then you can do the same thing just in a non-tax advantaged account, just a normal brokerage account, opening it with the same type of brokerages. You can put it into the same funds. The only difference here is that you're going to be able to withdraw at any time without taking any sort of tax penalty, but you also lose the tax benefit of being able to pull it out tax-free after 59 and a half. So this method is great towards retirement because these are investments that work in the background for you. You've always heard that old saying that until you learn to make money in your sleep, you're going to work until the day you die. These are those investments that you just set on auto. It comes straight out of your paycheck or straight out of an automatic withdrawal every single month. It's working in the background for you, and you have minimal managing that you have to do, possibly once a quarter or even twice a year, just to see how your investments are doing. So at the bare minimum, I would recommend you at least get that employer match. If they put up to 5% for match, then put in that 5%. You're missing out on free money, and that's something that you should not do. It's only going to compound in the long term for you. As you progress through your career, or you start to increase your salary, or you start to pay off more debts, you definitely want to start increasing that to like around the 15 to 20% range. That's a nice comfortable range where you're going to be setting yourself up for retirement, but you're also still able to enjoy your money in the present. And I'm all about enjoying the money that you earned. I don't want you saving every single dollar that you have. Save as much as you're comfortable with. That 15 to 20% threshold will get you there comfortably. So how does options fit into this equation? Honestly, you should not dedicate a certain portion of your money every single month. You should only invest a percentage of your portfolio in options that you're comfortable losing. So these are going to be much more speculative plays depending on what stocks and what ETFs you play it on. And I honestly don't even contribute to my options account every single month. The market's been pretty crazy recently, and I feel like every trade that I do that was a positive win just gets knocked out a few later by a loss. As of this time, I'm not contributing any more money to my options account. I'm just trying to have that grow by itself. And one of my ultimate goals is going to be able to fund my Roth IRA year after year solely from my profits from options trading. As of right now, the limit that you can contribute to a Roth IRA every year is $6,000. So that means that I would need to generate $500 worth of income strictly from options profits each year in order to not have that $500 come out of my own income. If this is something you'd be interested in seeing me accomplish or just along the line, make sure to leave a comment below and I can start documenting that journey and show you that it is possible to start from a small account and get to the point where you're funding your long-term portfolio. You might have heard this a lot on other options YouTubers pages, but investing with options is useless without a long-term portfolio. If that is your sole investment strategy, you're guaranteed to lose in the long run because options play a lot with your emotions. It's hard to control emotions unless you've had a lot of risk management lessons, which you learned the hard way. So here, I'm just recommending that anytime that you start to make some options gains, go ahead and put a portion aside to either withdraw for you to spend for yourself or to go ahead and just deposit into a Roth IRA for the long term. That way, you're guaranteed to have that money already sitting in stock and not options where it can be all lost. and you're setting yourself up even more for the long run. All right, guys, if you made it this far in the video, I appreciate you guys sticking around. Go ahead and leave a like, as it takes a little while to edit these videos with a full-time job, family, and a kid. So it really helps out a small YouTuber. And if there's any topic that you would like to discuss or see in a future video, drop that in the comments below and I'll see what I can do. I'm posting videos every week-ish, so make sure you subscribe so you don't miss out.